Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over, some of the kind of weird pumps on the chart that's going on, as well as, just continue the coverage of the red across the board, as, of course, all the coins are basically in very fragile positions. Most of them have done heavy retraces, and so, of course, some bounces are expected once you get to certain levels of support. As Bitcoin and ETH go sideways a little bit, then you should see some of the stronger altcoins or even some of the kind of like fake outs on the weak ones that are just being manipulated by whales, pumping on mean reversions or trying to perhaps even front run a turnaround in the market. And we basically see the same thing in stocks where we did have significant red days. We had a huge pullback on the stock market. And so, what are we seeing? Of course, we're just seeing a mean reversion. We're seeing stocks wanting to basically find their support, retest some prices. And, this is what happens in the market. There's up and down. It's not just up only, it's not just down only. And so as you catch some support, you are going to have little bounces. But whether or not that constitutes a bear trend or a bull trend depends on a lot of macro factors. And the key macro factors that we're going to be paying attention to are, of course, tomorrow's gross domestic product revisions and assessments, which can have some indication on the possibility of a deeper recession or on the possibility of the economy going a little bit more stagnant. And of course, we're also going to be paying attention on Friday to the PCE data, which is related to inflation and that core PCE data that the Fed uses to make its decision. To see whether or not it's getting better or worse, as well as the federal chairman Jerome Powell's indication as whether he's ready to make a pivot or not. The market has already priced in the Federal Reserve pivoting to a more kind of bullish stance for the stock market. And if that ends up not being true, if they did in fact count their chickens before they're hatched, as I've been saying for several weeks now, then this could be disastrous for the market. This could be a very bad thing if the Federal Reserve Chairman suggests he's not ready to pivot yet. So let's just pay attention to those things. And guys, if I seemed bearish in yesterday's video, you guys have to understand, I'm not being bearish and I'm not being bullish. I'm just saying that we should wait. If you're going to put a substantial amount of money in the market, we should wait to see what Thursday's gross domestic product and also the Friday's PCE data and what the federal chairman has to say. Like, this is an important week. You don't have to just be taking a position on Tuesday, when all the data comes out on Thursday and Friday that you need to make an assessment for how you're going to position yourself in the market. you know to just go in on Tuesday is just gambling, okay? Like, of course certain things are going to be popping off after we had a huge 15 to 20% drop on Bitcoin. As we found support, some things are going to pop off. I wasn't being bearish. I was just saying I'm not going to recommend to people to go long, even though there is the possibility of a bounce because of those double bottoms that we got on the chart, because of that support that we got at key critical supports on many of these altcoins. I'm not going to recommend going long because I don't have the data that's coming on Thursday. I don't have the data that's coming on Friday, and I don't know what federal chairman Jerome Powell is going to say of the Federal Reserve, right? And those things are very critical to the direction of the market. So I will be making my recommendations after I have that data. This is a data based trading show. It is not just what do I feel, what is my intuition. That's garbage, okay, guys? So if a lot of you guys are just going by your feelings, well, no, sorry to inform you, but nobody cares about your feelings. And in fact, your feelings may get in the way of good trading. I do not always have to be trading. I do not always have to be in a position, and neither do you. You can take your profits, and even if we have a pullback, you could take a small risk, but I just would not recommend to have a huge risk, especially if you don't have good risk management. When we have key crucial data coming out on Thursday and Friday, which could just dramatically turn the direction of the market, either way, up or down, and just destroy, half of the gamblers, whichever way it ends up being. And so, guys, like I'm trying to teach you the tools that I use in order to make assessments and how to be in or out of the market, with clear mindedness based on data. And one of these is the volatility index of the S&P 500, which is the VIX. And guys, look, yesterday. Right? Yesterday we only had this kind of weird little candle like being formed. It wasn't even fully formed. It was just partially formed. I made my video in the morning and we had just a massive amount of pumping in volatility, which is bad for trading. And so yesterday I had a theory of trading, which was that it was a potentially a bad day for trading. If you wanted to look at the direction of this, that it was more likely that it would continue to the upside than that it would turn around. Just if we go by likelihoods, right? By statistics, it was pumping, and of course, you can look at these things on the log chart. It looks even worse on the log chart, but and because this structure goes over many months, it may be operating on the log chart. Not sure. This is a bit of a equal triangle here, so most likely exponentials are not really coming into play. So I still do prefer the linear chart for mapping this. And on the linear chart, what you can see is that today we ended up confirming that rejection off of the bearish rise, right? Because if the VIX rises, that's bearish for trading. But we did get a rejection off this kind of 89 on the daily here, off the 200 on the daily there, and so this has at least temporarily given us a pullback, which made trading easier today. So guys, if you got into some positions last night, right, or yesterday afternoon, then congratulations. But when I made my video in the morning, I didn't have any of that data to suggest that it would be a good day for trading. The only data that I had was that it was going to be potentially a bad day for trading. And so you have to make a decision for yourself when you're actually going to launch your trade. And so if you do see the VIX coming down, you can have a hypothesis for the day. Your hypothesis, your theory of the market for the day could be that it's going to be an easy day for trading, right? If you see the VIX coming down. And guys, I'm teaching you this stuff so that you can do it on your own. You don't have to look at my video and say, oh, this guy is wrong or this guy, was right, who cares what you think about what I did? Like, I literally don't care if you think that I was wrong or right about this or that play. It doesn't matter, right? I'm only like proud of those things for myself personally if I do it for myself. I don't care what anyone watching this show thinks about it. I'm trying to teach you how to do it for yourself. Okay? And so the guys that I watch on YouTube, first of all, the majority of everything on YouTube is junk. The majority of everything on Twitter is absolute garbage. And then you have all these like weird, pump and dump gurus, with their, weird like paid groups and, all these kind of like armies, these like shills, these like, whatever they want to call themselves, right? Like the kings of all these stupid armies of coins and stuff, and they will dump on your heads. There's very few good YouTubers. There's very few good Twitter handles. There's very few good community leaders, including, for example, my friend Retta and my friend Athena at the AR Collective. And then we also have, for example, in YouTubers, I like Crown and like, Eric Crown, that is, of Crown's Crypto Cave. And then, of course, we also have Mitch Ray, who I just recently started watching a couple episodes. I had watched him like a couple years ago, or maybe a year ago, and I just found his channel to be very noisy, with a lot of sound effects and stuff. But a couple people in my group recommended that, he might be someone that I should watch, and so I am starting to watch, and I love the way that he shares education. Same as them. That's what I'm trying to do. We have other guys who, have just kind of like out of the box thinking, which also I have out of the box thinking, like Cosa Verdes, and so these guys, love them or hate them, agree with them or disagree with them on any particular point, right? The key point is they're educators. They're trying to teach you their methods. Who's that guy? Ben Cohen, I believe. Like he always is trying to teach you like how he's doing his things, right? He shows you, he goes through the steps. I don't watch Ben Cohen, but I've seen several of his episodes. To be honest, I don't watch a lot of YouTube. I don't read a lot of Twitter. I don't. I don't participate in a lot of groups. I just have a couple that I check in with every once in a while. I don't catch every episode. Um, and I just try to make my own theory of the market using the tools that I've developed for myself. And so sometimes if you see that my channel has a bit of a weird edge to it, it's just because I'm in my own thinking. I'm not, involved in what Twitter is thinking about everything. I'm not involved in what YouTube is thinking about everything. I'm not involved with all these weird, gurus and leaders of stupid coin armies, which I could care less about. I don't even care about the dev teams, about all these coins. I think that they are trying to please investors. I do not think that they are trying to please you as consumers. And to be honest, I don't feel bad for any of them if they've had a hard time in these markets. I think the vast, vast majority of all of these dev teams knew what was coming in terms of like a potential crypto downturn, and I think almost all of them set up their charts, set up their tokenomics and set up their businesses in a way that they could cash out before the bottom of the market and dump on your heads. And so I have absolutely zero sympathy for any of these dev teams, but there are a couple that are doing a good job, and but again, like we have just a sea of coins which are just kind of scammy, and so I do not believe in these coins. I'm not loyal to these coins. I don't care how any army feels about any coin. The only thing I care about is trading, and if I'm going to hold anything, it's going to be a good project, and I rarely hold anything. Okay, guys. But the key point is learn how to assess these things for yourself. Don't be dependent on some Twitter. Don't be dependent on some YouTube. Don't be dependent on some guru in some weird group, and especially don't be dependent. And like this is financial advice. Don't ever be dependent on any of these coin army leaders, quote unquote, quote unquote leaders of a coin army, because those guys are the biggest idiots in all of this, okay? And guys, the VIX is dropping today, right? So that makes good conditions. What else do I check out, right? USDT dominance. USDT dominance chopping down. We did have a bit of a pump up here, which did suggest that there was a likelihood that it could just bullishly continue to pump up to perhaps 7, point 10 or whatever percent, and that would have been perfectly reasonable to consider as a possibility. But what happened is that we turned around a bit. We're getting a little bit of a check back here, and it's nothing bearish. This does look like kind of a bull flag, right? That could pop up to the upside still. But at least for today, our theory of the market is that could be a good day for trading as USDT dominance is coming down along with VIX coming down. And then if we look at the dollar, we can see that the dollar is still being pretty scary. This is still kind of a bullish candle in general, in that it looks like it, had some retracement yesterday, which I was talking about, and that it's just finding support at this line that I have here almost precisely, and it could bounce back up. So, you know, 2 out of 3 ain't bad, right? Like compared to where we were a couple days ago, we are pulled back a little bit on the dollar, and so on average of these like 3 candles, like pretty good, not too bad, right? Like just kind of neutral, at least for today, right? Today. And so, we have 2 out of 3 good conditions and then a little bit of a neutral condition on the US dollar. And so, what can we consider? Okay, maybe today is going to be a good trade day. There are other factors that you can look at, like the fear and greed index. You can look at a whole bunch of other indicators to decide if today is more likely to be a good day to trade or a bad day to trade, and also the time of day. Maybe this looked worse, in the morning, and then in the afternoon or maybe late at night, it looked much better, right? And so you guys have to use these tools yourself before you enter your trades. Don't be dependent on me. Don't be dependent on any type of group guru. Don't be dependent on any leader of a coin army. Don't be dependent on any Twitter handle. Don't be dependent on others if you're going to be a trader. Like my friend Retta says, sheep get slaughtered, okay? Like sheep get slaughtered. So if you're just following, you are going to be the exit liquidity. You are going to be the idiot who loses all of their money. Whereas, maybe if I sounded bearish yesterday, it's only because I was protecting my capital, right? When I had just type of mixed data, I didn't understand what the data was going to be. Was it going to be bullish to, the next day, or was it going to be bearish the next day? And I only had, overall bearish signs. Plus, we have to wait for the data on Thursday and Friday to have a clear picture of the market. And so I don't need to be in a trade. I don't need to always be in a trade. I need to be always taking my profits, but I do not need to be always in a trade, guys. Like, you can take a break if the day looks kind of cloudy, if the information is a bit confused, and unless you have a clear setup on the charts, which we did have a lot of great bullish setups. I do have to admit that, and I was pointing that out on Kadena and Zilliqa, which is that we did have bullish setups. And if we look at Kadena, you can see that we did get a little bit of a pump, right? So, that's 4%. Not bad. Again, I said you could take a risk there. We did have a higher low, just on this really local level. If we jump down to like a 4 hour, you can see it a little bit more clearly. As I mentioned, we had double support. We're kind of on this horizontal support, this little gray line here. We got a little bit of support on this diagonal here, right? And so if you're buying in this area, it's not the worst decision to make. It's just you're making it blind. We don't have the PCE data that's coming out on Friday. We don't have the gross domestic product information that's coming out on Thursday. We don't have Federal Reserve Chairman Jerome Powell's concept of the market, which he's going to be speaking about on Friday as well. And so this thing could just as easily be a bear flag, right? This could just as easily be a bear flag that takes us to $1, right, on Kadena, as it could be, a W, which has a bit of a pump. And I think the determination that really is going to control this market is just tomorrow's gross domestic product information, Friday's, PCE data, and of course Friday's, concept of whether the Fed is going to pivot or not by Jerome Powell. It's not going to be this setup. This setup is worthless. Altcoins are the bottom feeders of the entire global economic markets, right? Like this is just trash, guys. Like we're literally just talking about trash. This is nothing important. You don't have to be loyal to this coin. You don't have to, you know, think about this as anything special. This is just an asset to be traded. And so we really have to understand our theory of the market. We have to understand what we think about the whole market before we get into any trade, because this is just as likely to dump as it is to pump in the current macroeconomic setup. If we look at ZIL, we do see that we were at that support level, that very critical support level that I suggested, and we also were kind of, doing that check back to that kind of Cheshire cat pattern that I had, called out here. I know this is just a bit kind of a loony idea, but it's just for fun. I just wanted to show you how, like, almost any pattern can be used, and if you see us checking back to the 200 here. Look, we basically check back to the Cheshire Cat's smile, okay? Like, this is the pump that we got. We were at my support, right? At my support level. And what did I say in yesterday's video, right? I said, like, whenever we break down from one of these patterns, there's a good chance that we come back and test the bottom of it. And what have we done? We just did that to the tune of approximately a 15% pump. Right now, we're sitting only at about 10% up. But hey, that was a pretty good trade. I didn't take that trade myself because I couldn't count on that happening. It could have happened with Kadena as well, right? Like Kadena has a growth curve too, but it didn't do it yet. So will it do it? Maybe. There's a chance that it can, but again, like, why do I need to be in every trade when I don't have the data of the market? This is a data-based trading channel, and so I'm going to wait for a little bit more confirmation. And like I said on yesterday's video, I don't mind buying back a little bit higher on confirmation of the data rather than just trying to grab a bottom in what could be a bear flag that just drops off of a cliff, okay? And especially since some people in my audience may not have good risk management practices, they may not be using their stop losses, they may just not understand risk in general. Like, I'm not going to take a really strong recommendation. Of course, I was bullish in that I was mentioning that we did find support both here, and that, of course, we were putting in a little bit of a W and a little bit of a higher low pattern there, which could suggest some upside. And I did say that if you wanted to take a little bit of risk, like, you could go ahead and do it. Just I'm not going to recommend it on my channel at this time until we have the rest of that data. And you can see why, right? Like, here's ADA basically doing the same thing. Not everything is going to be a Zilliqa, okay? Not everything is going to be some of these coins that are just going for it, okay? So again, like, we do have good trading conditions. If that stays up, if that stays good for tomorrow, then perhaps this week could end, quite good. But, if we do see this stuff turning around and you do see a little bit of a resistance to the downside there, or support rather, we could just end up popping back up. And so that would be bad for trading. Um, I don't know, guys. Look at the stock market, okay? Look at the stock market. We're in that support zone that I suggested that we would be likely to come to. But we're not like bullishly bouncing off of it or anything. We're not doing anything that looks bullish. We're underneath. Let's look here. We're underneath the daily 5, that daily 4, and that's a very bearish thing to be wicking down from that daily 5, that daily 4. We're well under the daily 10, and so it's just not a good look. Like we're dumping, guys. We're dumping. And so why would I be bullish if the stock market looks really bearish right now? And if we have the potential to dump even lower, Same thing over here. We're entering that kind of temporary support zone that I had marked out. And if we can get some good news by the end of the week, then maybe we could continue to the upside. But otherwise, we could just as likely drop down. We're just like in the middle. We're just in the middle of this area, right? No reason to be necessarily taking a position right now. Same thing here, right? So all of this stuff ended up working out just like what I was saying. All right, we're just in that kind of zone. And Nasdaq, we did end up breaking down below, and we're actually using our previous support as resistance, which is not a good look, right? Like you don't want to use previous support as resistance. That's not bullish, guys, right? That could suggest more downside, and you definitely want to be above the 10. You don't want to be this far below the 10. That's pretty scary. Like if you look at your EMAs, like you want to be here. You don't want to be down here, right? That's, or lower. That's awful. Like we're actually even getting squeezed down by the 89 right now on Nasdaq futures. So that's not bullish. Like we have to recapture this area very quickly if we want to stay bullish. And I think the market is just kind of hovering in the zone because it wants to keep the option to go down and it wants to keep the option to go up as the market waits for that gross domestic product, that PCE data, and then also Federal Reserve Jerome Powell, uh, the chairman, telling us what his position is on the market. And if we go over to the Russell, same thing. Okay, guys. So yeah, this stuff could turn around, but also it could just get smacked down, and the market is just reserving the right to do either. Same thing here with Ethereum. We're getting, pardon me, a Bitcoin. We're getting that pump up to the upside, which was expected, as we put in a bottom here, kind of a double bottom. Got a kind of a mean reversion. I mentioned probably we can get to 22,000 very likely, and 23,000 is kind of a stretch goal. We really have to secure over 23,000 to get bullish. If we secure over 24,500, then that's very bullish. Maybe there's going to be a limit somewhere here around 25,000. Like even in the best case situation, you guys have to look at this trend that we continuously got rejected from and got slapped all the way down from, right? So even if we do have a just an amazing pump, right? Let's just say we take out these levels, still we're very likely to get rejected at this kind of $26,000 level. I mean, just depending how we move, it could be 25 or 26. We're just likely to get smacked down from there, okay? Like this would be a very nice fake out, a very nice mean reversion if we get into this area, right? Uh, could be a fake out before getting smacked down. And so I've been saying this for many days now. I just don't know if this bear flag is just going to play out. I don't know if we're going to just continue dropping. The volatility was suggesting that we could just continue to drop. That volatility, I believe, is played out now. Uh, yeah, it's almost done. You see, previously we were 50%, now we're almost completed. We really haven't had the EMA cross the ribbon yet, so I can't say. But once this move is completed, then we're going to be set up for another volatility move. And so I'm just going to be watching for the next one at this point. It seems like you know, the downfall from this area. Let me just show you. Let me kind of zoom out here, clear some stuff off the chart. So basically, we had this extreme volatility right now. It basically took us all the way down, okay? Like you can see primarily here. Here we had a cross, and we just had some type of muddiness right here. Now we had a very significant cross here, just plummeted down, okay? Like this entire volatility expansion just took us all the way, down, and then it started to meander as it started to taper off, right? So it started to meander. And this could suggest that we could get a pump on the next volatility move, but we do have to wait for this one to just, kind of pinch off and finish, right? Like this kind of a poo move hasn't, finished its a pinch off yet, right? And on the CME chart, something very similar. You can see we had extreme volatility here on the daily. It just continued to move, and it's just not finished yet, guys. It is rounding, and so we are getting this kind of rounded kind of measure, but it could easily just start expanding again. I mean, we are getting this kind of pump up. This was obviously volatility to the downside, and it started rounding off. So you do see us starting to move to the upside as it's rounding. But again, like it could carry out all the way to the other side, and that could be just devastating to the downside. Or it could just get a rejection, in which case this thing might even continue to the upside. So we're just kind of waiting for these moves to kind of like pinch off, these volatility moves to pinch off, where the EMA and the ribbon cross over, and then we can just assess from there, right? Assess what we look like from there, whether we end up in a bullish position, or we end up in this type of weak, continuation to the downside position. Same thing with Ethereum. I did show you the breakdown point. That's where I warned to get out of the market. I did suggest that we could catch support in this area or this area and have some type of a bounce just to kind of check back. We are doing that. We got a little bit of a double bottom here, so we are seeing that pretty nice pump. In the group, we were talking about that, and that's a nice 10% move. So maybe if you caught that at the double bottom, not yesterday when it already was pumping, but at the double bottom, then that would have been a good play. Yesterday, it was just too risky to enter this after it had already pumped. You don't know how high this thing could go. This is obviously weakness in the market, so you can't count on it, like just continuing to pump. These things don't always do a full check back. Sometimes they just do a little bit of a check back and then they just continue to drop. But of course, if we go over to ETH's CME chart, you can see that we did perfectly fill that CME gap. And what was I saying yesterday? Most likely ETH would continue to pump to fill the CME gap at least. And that's exactly what we did. If we drop from here, hey, the CME gap is filled, okay? The next CME gap that we have on ETH is down here. And so if the market continues to be bearish, then I would suggest that most likely we're going to come down and fill this gap at that $1,300 level. And then potentially we could even come lower, to this kind of more kind of supportive area down here around 1200, which I had kind of set as a target as well for this market to come back to. You do see that we have a major macro diagonal there. And so if we do find support in either of these areas, it would be also on that diagonal. And then we have a much more devastating diagonal down here, but it does cross with some supports. So, that area does tend to get a little bit more supportive as we enter below 1400, okay? So anywhere from 1400 and below, pretty good areas to catch some support. But right here, we just had that ETH CME gap. Okay, like, do you really think that like we're gonna just pump from there? It depends on the data from Jerome Powell, from the PCE data, and from that the gross domestic product data. It's possible. It's possible some combination could make us bullish. But overall, we have this area to check back to, okay? Again, I'm not calling any moves this week. I'm waiting for data this week. All right, guys, I believe we covered everything. Don't really want to spend too much more time on that. Same thing, just to bottom line it, same thing. If we get over 23,000, there's a chance. If we get over 24,500, there's a good chance. But then we also start having risk at 25 to 26,000 on this kind of bearish. This is a bullish trend line, but it's actually bearish because we get rejected from it so often. And so, we could easily pump up and get rejected, or we could easily break down if this is a bear flag, right? And find support perhaps on that weekly 300 simple moving average, which then could perhaps build in some bullish divergence on our RSI, which then could perhaps take us up to these areas. The market is so confusing. Any of this stuff could happen. So let's just keep our minds open. Don't be a perma bear. Don't be a perma bull. Just be a clever little alpha monkey. If you want to take some short-term trades, yeah, can I recommend hodling at this position? No. Do I personally think that we need to be in a trading position when we're waiting for data? No. Can some coins pop off like a Zilliqa? Yeah, of course. That's what I was saying, that Zilliqa was most likely to do that, right? I was saying it's most likely to make a play to check back on this kind of a macro pattern as it was breaking down, and that's exactly what it did. Okay, so who knows? The Federal Reserve will determine if we continue to be bullish or not. And that data comes out Thursday and Friday. That's your alpha for the day. Stay safe and happy trading.